right, everyone, this is Vishal from EQUITY.GURU, and welcome to Chart Attack. And today we're going to talk about currencies. It's been a while since I've talked about that US dollar chart, very interesting technical, interesting technical breakdown, I guess you can call it. But it has a lot of people talking, especially given the recent Fed, pause, right? Because a lot of people are now seeing that as, I guess, the Fed going. Again, I don't want to say dovish, but that's how the market is perceiving it, even though the Fed is saying that there's two more rate hikes coming by the end of this year, but perhaps the market's just not buying it. They're, betting against the Fed. But as you can see here from the Fed Watch tool, there is a 73.2% chance that there's going to be a 25 basis point hike come the July meeting. So this is maybe more just the market's just happy that the terminal rate is almost being approached, and the Fed is going to stop raising rates in a few months' time, right? U.S. dollar chart. We've talked about this major downtrend that everyone's been seeing, saying calling the death of the dollar. We've seen headlines about BRICS and all that kind of stuff. But recently, the dollar in April and May was just ranging around this area, the 101, 102 zone. 101, as you can see, is a very important support level going forward, and we'll talk about that in very soon in this video, because that could be the target we are heading to next if you are bearish on the US dollar. But there was this chance that there was going to be a bit of a reversal, because the markets were the dollar was just ranging, and then we broke out. We had a few higher lows and higher highs here. But obviously, the major trend is still a downtrend here. But after the Fed meeting, we began to sell off, and I would say a very important level has been taken out here at around the 102.90 zone. And I say that because this is the higher low that I'm working with, right? So the higher low here is at 102.95, and as long as those higher lows are maintained, the uptrend continues. But because we closed below it, it's not looking too good for the US dollar, especially with this major close, right? Very, very strong red candle on the 15th of June. And basically what we are seeing now could just be a typical pullback corrective retest before we continue lower here. So I find this interesting because a lot of people have been bullish on the dollar, based on what's going on around the world, I guess, when it comes to geopolitics and such. But I find it interesting because now, if you look at monetary policy around the world, right, basically the way it works is money tends to run to that currency which has the higher interest rate, right? Obviously, you've seen what's been happening to the Japanese yen. It's been getting basically demolished by all other currencies because the Bank of Japan is keeping rates at negative 0.1%, while most of the world most of that Western world, is raising interest rates, right? So you see this flow of money going, betting against the yen because it has that lower interest rate, while other currencies have that higher interest rate. And again, when you play the currency markets, there is a carry trade as well, where you make money if you hold the currency with the higher interest rate. So recently, we've seen the Fed basically pause. Although they are saying two more rate hikes are coming by the end of this year. When you look at the Bank of Canada, and also I would include the Reserve Bank of Australia as well, they paused, right? Australia paused for a couple of months, the Bank of Canada paused for a couple of months, and then they both sort of surprised the markets with a surprise rate hike. And there could be more in store, right? There could be more rate hikes coming forward for the Bank of Canada and the Reserve Bank of Australia. You look over at Europe. That's an interesting one because their inflation rate is still quite high, around 6% for the entire Eurozone, but their interest rates are around 3.5% right now. And there's this divergence now from the Euro zone and the Fed, where the Eurozone says, hey, look, we still want to raise interest rates going forward because our inflation rate is still quite high. So this is interesting because you would expect then that the Euro would gain some strength on the Fed pausing and the Eurozone, or the ECB, still raising interest rates. And you are sort of seeing that here with the ECB or the Euro rising slightly. And then this week, we are going to hear from the Bank of England we're also expected to raise interest rates. But then again, it's about their forward guidance. We want to sort of hear what they're thinking about. Are they going to mention that they're near the end of this rate hike cycle, or are they going to say something similar to the Eurozone where it's like, hey, we still have more hikes to come? And you can see here the British pound is also breaking out against the U.S. dollar. But going back to the U.S. dollar, even though the U.S. dollar is falling, it is still doing quite well against the Japanese yen. No surprise though, because again, the dollar still has that higher interest rate than the yen there, and we just had a major breakout here above 141, and it looks like there's still more room to the upside, perhaps hitting 146 on the U.S. dollar Japanese yen. And then, interestingly enough, if you look over in Asia, while we're raising interest rates, the People's Bank of China, so China actually cut interest rates for the third time this year, right? So you're seeing that sort of here play out on the U.S. dollar against the Chinese yuan, where the dollar is gaining against the yuan as well. So, maybe I'm just nerding out being a forex trader or following the currency markets, but it's a very interesting period now when you have the Fed sort of pausing, but other central banks still stating that they want to raise interest rates, and you're seeing that sort of move here on the equity markets. If you are someone who follows the dollar, there's a few charts that I like to follow as well. Just worth watching. I don't have the chart actually of the Polish zloty and the Hungarian currency here as well, but you're seeing a bit of a pullback here since May in many of those currencies. Here I just have the South African rand here against the dollar. So again, the way these currency markets work is the base currency is the first currency. So in this case, the US dollar. So if this chart is moving up higher, it means the dollar is appreciating while the South African rand is depreciating, and vice versa, right? If this goes down, it means the South African rand is appreciating while the dollar is depreciating. And again, these currencies are based against one another. But the one I find very, very fascinating is the US dollar versus the Mexican peso. Mexican peso, very, very strong. And you can see here, again, this chart is moving downwards, which means that the US dollar is depreciating against the Mexican peso while the Mexican peso is appreciating or getting stronger. And it's just been a very, very strong rally here for the Mexican peso. And we are approaching a key weekly level around the 17 zone. And again, if that dollar continues to weaken, on the DXY chart, then we're probably going to be seeing a breakdown here, which means the peso might appreciate up to 15 Mexican pesos there, which I find very, very fascinating. Of course, talking about the U.S. dollar, we also got to talk about the anti-fiat, right, or people who are the gold markets, right? A lot of people equate this as the anti-dollar, and you can see here, even though the dollar is weakening, gold just continues to range now between 1980 here and the 1935 zone here as well. So from a technical perspective, you're just waiting here for a breakout or a breakdown to give you a sign. But I would say, recently we've been in an uptrend, right? Higher lows, higher highs, and this is probably just a corrective stance here, a corrective move here in gold. And likely we are going to break up to the upside at 1980 and continue higher. But again, I'm just saying that because we don't have that breakout just yet, right? We need that breakout to confirm that. So I'm not saying go long the gold here right now. I'm just saying from probability basis, because we are in a higher low and higher high uptrend here, that this is just a corrective phase or a retracement. But you can see the range, right? It's very obvious. We have our downside at 1935 and our upside here at 1980. You guys can probably see this trend line here as well that I've drawn out, which is something we talked about on the weekly chart, right? This major channel here. And you can see how even right now we are respecting that major channel as well. So there's a lot of bullish, I guess you can say, supportive confluences at this area. We're testing, a major, as I said, trend line here. And you can even say this is a major support zone if I draw that backwards as well. So even though that the dollar is weakening, gold here is still just ranging here. And I guess it has more to do with, interest rates and stuff as well, right? Because now if rate, because gold doesn't yield anything. Technically, it should be positive, I guess, going forward, right? If the Fed is very close to ending their rates as well. But then again, the bearish case could be, okay, inflation has come down and rates are high. So, real rates are still positive, which means you might not want to be in gold in that sort of stance there. But I think that this move here in gold is something to watch, because there's going to be obviously a very big move coming forward if once we break above or below this range. If we do break below, then we probably do head back to the 1820 zone as well. But maybe the catalyst for that gold move is going to be what happens once we sort of retest that 102.95, 103 zone here on the US dollar. Do we continue to break below, which would be, or you reject, sorry, and continue this downtrend down to 101, which might give us the upside break on gold? Or do we climb back above 103 and just continue this maybe new uptrend up to the 105.50 zone, which might lead to gold breaking down below that 1935 zone? So very interesting time right now for the currency markets in general, because of this US dollar and this divergence, I guess you can say, from the Fed and from other central banks. But going forward, I think we're going to want to hear what these central banks are saying, right? And this week we have the Bank of England. Are they going to adopt a dovish tone, or are they going to say something akin to, oh, there's more rate hikes coming forward? And if that is the case, then I think you're going to see the dollar weaken even more here. And it's going to be fun for your currency traders out there, because it does mean that a lot of these breakouts will continue higher, especially as we have here on the British pound. Major breakout, maybe heading back to 131 or 130 in the near future. But then again, the dollar is still doing well against many of those Asian currencies like the Japanese yen and the Chinese yuan, which, again, interest rate differential, right? China's cutting rates, and Japan is maintaining rates at negative 0.1, which is seeing money flow to the US dollar when you trade against those currencies. I guess I'll just end with one more chart, just because we are, in Canadian traders. And a lot of people have been watching the US dollar, Canadian dollar, but there's this major range that the looney has been in, 138 here to the upside with 133 here to the downside. And just last week, we actually finally broke below that range here on June 15th. Major breakdown there. And I'm just going to get rid of that, because that was my target, or that was my trade if we did reverse to the upside, but that did not happen. So basically, we are now in a breakdown trade, where if we do pull back and retest and we continue, we might want to see this seller step in, and we'll see continuation lower, which would play to the whole idea that the dollar is going to reject at that 102.95, 103 zone and continue lower, which means that the Canadian looney and all the other major currencies like the euro, British pound, heck, even the Swiss franc and the Aussie and the New Zealand dollar will appreciate against the US dollar based on the dollar chart falling. So I find this very interesting, especially because you're Canadian. This is a major breakdown which has happened below 133, and perhaps we're going to see the looney fall back down to the 130 zone there as well. So big move in the US dollar chart. We're seeing major breakouts on the major currency pairs, indicating that a weaker dollar is likely to come. All right, folks, but that's it for me. If you enjoyed the video, give it a thumbs up. Be sure to subscribe, and I'll catch you guys all in the next Chart Attack video.